Welcome to the December 20th, 2021 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. Merry Christmas. I'm Spencer McGowan, your financial weatherman. With this week's fast-paced tour of the global financial markets, I'm president of McGowan Group Wealth Management based at the Crescent, a team of 10 devoted to your success. This YouTube is evidence of our devotion to helping you advance your skills as an investor. Dow Jones Industrial Average is the starting point this week. As usual, this is year to date on the Dow. Arguably, but we probably will finish the year with double-digit returns from the equity markets. And that was not without trials and tribulations. You see the correction in January to below 30,000 on the Dow. This was at the advent of the Delta variant. You can see the correction here and here. The Dow went as low as 33,000. And this is the Omicron implosion that we had right at Thanksgiving, and a recovery. This week finished somewhat negative on the equity market, but we do have a bounce back. The low this is the low so far from Omicron sell-off, was about 34,000. But you're also seeing portfolios shifting before the holidays, and that was a key factor there. But a good year for patient investors that own good assets in the recovery. The Federal Reserve this week, this is their projections. It's on the website at NetWorthRadio.com. You can also download the Apple podcast of the longer program where we go more in depth. But these projections are important, and what they tell us is what the Fed's actually thinking with all their learned economists. We've actually had the chief economist of the Dallas Fed on the program a few times. Change in real GDP, 5.5% for this year. That's healthy growth and the full recovery from the pandemic. 4% next year. Notice the theme, 2.2, 2023 economic growth, moving down to 2% and below longer term. Inflation, they're saying 5.3 for this year. We just got a 7% consumer inflation and nearly a 10% producer inflation, and that was a record. So this appears to be behind the curve. They think inflation is going to go back down to 2%. The Fed always seems to like 2% in their long-term projections. Great news for unemployment, 3.5%. But that producer price index, when that hit just before the Fed meeting, they felt like they had to do something. What are they going to do? Well, they're going to stop pumping money into the economy. They've printed close to $5 trillion here to stave off the impact of the pandemic, to help get back to record employment. They said we're going to start raising rates and we're going to stop pumping money into the economy essentially over the next 6 months. They're just tapering the amount of printed new money that they're putting in the system. Then they're going to raise the cash rates. If you noticed, your money markets have been 0. 0% is not good on savings. Well, that rate is likely to go up to 0.75% according to the Bloomberg consensus after the Fed made their announcement this week. But it's not a disaster necessarily for the economy. And their responsible behavior actually had Treasury rates drop below 1.4% on the 10-year Treasury this week. Then they say they'll go to about 1.5%, and here by the end of 2020. You're looking at a 2.5% rate on cash projected after they made their announcements and their analysis. So this is to prevent the longer term inflation. Arguably, the Fed was very successful at navigating the pandemic. The consequences of printing too much money are speculative bubbles. When they start to dial back liquidity, speculative bubbles start to implode. I want to first cover a bargain area, and this is an extraordinary performance. You can see right here, the healthcare stocks had a tremendous spike this week, and they've done the best as a sector for the month of December. So that resiliency also related to good results, share buybacks, cash flow, and 2 out of 3 of these, not a recommendation for your portfolio, but 2 out of 3, AbbVie and Bristol Myers trading at about 8 times earnings with great growth rates and a reasonably good dividend compared to the rest. So we've talked about the healthcare sector, and the healthcare sector itself hit an all-time high this week, the whole index. What we're seeing from the other categories, energy, infrastructure, the intelligence we're getting is that we're going to start to see big dividend increases. Some already have big dividend increases out of the pipelines and the energy companies. They have tremendous cash flow in the current market. The first quarter results or the fourth quarter results are likely to say we're going to start to distribute more cash flow to the shareholders, and that could be good news for that sector as well. Not good news here. This is Zoom, and Zoom, one of the most successful navigators of the pandemic. Everybody learned how to use Zoom. I invite you to set your time for a Zoom meeting to upgrade your 2022 plan. Now, we had some Zoom in the growth portfolio. We sold it too soon. It actually went above $600. What happened here to 184 since it hit the 600? Why? Slowing growth. The company became the darling of the tech industry simply because they had mastered the technology, widespread adoption. Zoom became essentially the Kleenex of online meetings. And their brand name now arguably the best in the world in the space. But notice there was a multiple contraction here. Speculative bubbles will start to pop, and that may include cryptocurrency and other areas. That's what the program's going to be bringing to you. Here's another high multiple, Adobe. Everybody uses PDFs, right? And they had hit $700, now $556, and most of that decline was this week when they said our growth is going to be less than it has been in the past. Networthradio.com, that's where you can set your time for your own Zoom meeting. Apple Podcast, you can get the longer play program without commercials. Be sure to subscribe here because this quick update, the Financial Weatherman Tour of the global financial markets, is going to elevate your ability to understand, make decisions, and we look forward to bringing you each week YouTube McGowan Group. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.